Welcome my dear friends, welcome to Fitness Talks. Today we are going to talk about a very important topic that's called 1010D. The last month we have seen the launch of LIC's Jeevan Utsav. After this launch, a lot of talk about 1010D, whether this policy will come under exemption, what is this capital sum assured, and whether term rate included or not, whether the survival benefit immediately will be taxable. A lot of doubts were created in the minds of LIC agents and then development officers and other people. Today I am going to clarify each one of those doubts, and then here today we are going to discuss about what is 1010D and then what is exemption. That is, 1010D is basically it gives exemption to life insurance policies. At the same time, what are all the exceptions and provisos to life insurance policy? Today we will discuss in detail. Friends, let us discuss this topic 1010D in detail. I would like to stay with me till end of this video. We are going to cover a lot of topics. What are all those topics? Let us see. Taxable life insurance policies. Today we will see what are all the taxable life insurance policies, how much is taxable, ULIP taxation if premium exceeds 2.5 lakh, what is the capital sum assured on death, whether it is exempt in all situations or not, and then under what head it is taxable and how much. So this is a quite exhaustive topic, my dear friends, so definitely stay with me and we will discuss it in detail about it. Yeah, the taxable life insurance policies. What are all the taxable life insurance policies? Imagine there is a person who is a disabled person. A proposer takes policy for his relatives who is a disabled person. If the disabled person predeceases the proposer, whatever the policy money comes, that becomes taxable. Whatever the policy money, yes, there is a clause in it, only the premium paid will be taxable under section 80DD3 because he has claimed the tax benefits for under 80DD. If the person predeceases under 80DD3, whatever the premium he is taking it back, that will become taxable. And second situation, amount received under keyman insurance. There is a lot of court cases under this keyman insurance, whether when it is assigned, it becomes no longer become keyman insurance. Then court also observed that if the consideration is not passed on, that time the keyman insurance it becomes a maturity process will be taxable. These are all the court cases I have done. Then in 2014 there is a clarity given from Government of India with the explanation. It means that all keyman insurance policies, whether it is with or without consideration, any maturity or death proceeds will be taxable. So that has become the norm today. As on date, any keyman insurance policy, maturity proceeds or death sum assured will become taxable. And then any type of insurance policy where premium exceeds, this is quite common, my dear friends. That is, any premium paid exceeds 20% of the sum assured issued before 31/3/2012. These are all the dates are important, my dear friends. 20% of the sum assured issued before 31/3/2012. It means taxable. Then after 1/4/2012, 10%, they made it to 10%. It means that if there is a 10 lakh sum assured before 31st March 2012, the premium can be up to 2 lakhs. Means 20%. If the premium is less than 2 lakhs, it is whatever the maturity proceeds under 1010D, it is exempt from taxation. If it exceeds, it is taxable. Similarly, if it is 10%, that is a sum assured, if the sum assured is 10 lakhs, right? And then if you are paying premium more than 1 lakh in a year, then the maturity proceeds will become taxable. And then for disabled person, as discussed earlier, from 1/4/2013 onwards, 15%. They have given little bit extra for disabled person policy. 15% if it is taken, it means that premium in excess of 15%, that will be taxable. Less than 15%, it is not taxable. So that is important thing, where whenever it exceeds these limits, it becomes taxable. That is 20, 10 and 15%. ULIP issued after 1/2/2021. The Finance Act, they have inserted this proviso where if the premium ULIP premium exceeds 2.5 lakhs, premium amounts, the annual premium exceeds 2.5 lakhs. It includes even multiple policies. So if the same person taking multiple policies, if the aggregate of all the premium exceeds 2.5 lakh in a year, for the policies taken after 1/2/2021, then those policies maturities are taxable. So treated at par with equity oriented mutual fund. So I would like to add one thing here. It is for 2.5 lakhs, my dear friends. Then it has to satisfy two conditions to get tax free. It means if the premium is 2 lakhs and then sum assured is 20 lakhs, then it is tax free. Okay. If the premium is 2.5 lakhs and sum assured is not 10 times, that is as per this provision, it is not 10 times. Say if it is only 2.5 lakhs means you are giving only 10 lakhs sum assured, then it will be taxable as per this provision, my dear friend, right? This proviso. So because this 10% of the sum assured, it exceeds the 10% of the sum assured, no, then whatever the maturity proceeds, that will be taxable, but it will not be considered as capital gains. Maturity proceeds are taxable according to the slab rates. Then here, if it is exceeding 2.5 lakhs, then it will be treated as capital gains, my dear friends. Capital gains, my dear, basically capital gains, short term and long term capital gains is there. If it is short term, 15%, there is no chance a ULIP for short term capital gains because minimum lock-in period is 5 years. Hence, this 10% will be applicable over and above 1 lakh, the whatever the profit you are making, capital gain you are making, 1 lakh. Supposing if you are investing premium 5 lakhs for 5 years and then it becomes 7 lakh rupees. So over and above 1 lakh, that is after 6 over and above 6 lakhs, that balance 1 lakh will be taxable as a capital gain, and 10% will be flat rate. So that is what this point is all about. Then in Finance Act 2023, one more provision has inserted because those who are paying premium in excess of 5 lakhs for any policy, it means like endowment plan or money back plan or whole life plan. This is kind of a endowment plan. If you are paying more than 5 lakhs rupees premium, then whatever the maturity proceeds, those money will be taxable. So in the excess premium policies, here you can do one thing. My dear friends, supposing if you are taking 2 lakhs, 1 lakh, 4 different policies, and then you can pick and choose which are all the policies you want to bring it under the exemption, that is less than 5 lakhs, and which are all the policies you can put it in the non-exempted. More beneficials can be put under less than 5 lakhs, and then lesser beneficial can be put under the policies where you will be getting the taxation will be done. So this is what about the 5 different occasions where your life insurance policy money will be taxable. To summarize, 80DD3, life, wherever the disabled person predeceases before the proposer, that policy premium paid will become taxable. Amount received under Cayman insurance, death and maturity will be taxable. Any type of insurance policy where premium exceeds in a year 20% of the sum assured if it is issued before 31/3/2012, 10% sum assured if it is issued before after 1/4/2012, and then for disabled person 15%. So if it exceeds 15%, then it is taxable, my dear friends. And then ULIP policy where it is premium is paid more than 2.5 lakhs, ULIP has to satisfy 2 conditions to get in order to get the tax-free maturity. One is less than 2.5 lakhs, other one is that this 10% they should be satisfying. So then only it is tax-free, my dear friends. And then the last situation where your premium exceeds 5 lakhs, then also it will become taxable. So this is what about this section, my dear friends. Next, it is quite exhaustive and it is most important. I'm going to talk about is how much it is taxable. A lot of people have got problem. Okay, so maturity means whatever the premium paid plus bonus and the loyalty addition minus premium paid excluding GST. Supposing you are getting a maturity proceeds of 15 lakhs rupees, but you have paid premium, net premium excluding GST 10 lakhs rupees, then what is the taxable amount? 5 lakhs. So that 5 lakhs will be taxable amount, my dear friends, if it is not coming under 1010D. So exemption. Then will the survival benefit? One question people have been asking for quite long time. In case of J1 Utsav policy, you pay 2 lakhs every year for 5 years policy, then 11th year you start getting 1 lakh for 10 lakh sum assured. It means, will that survival benefit be taxable immediately? No. So only at the corresponding year when it exceeds the premium. It means that from supposing if you are taking policy from today and then this policy supposing that policy starts giving survival benefit from 2031 onwards or 2031 onwards, it means that from 2031 to 2040, that meaning whatever that if it is not exhausting, that is 1 lakh you are getting for 10 lakh sum assured, 10 lakh premium you have paid, that 10 years you will not be taxed, 11th year onwards you will be taxed according to the slab rate. Okay, so ULIP taxation if premium exceeds 2.5 lakhs. Here treated as capital gains. Capital gains is 15% for short term, 10% for long term. As I said earlier, so for long term capital gains only it will be taxed because the lock-in period is 5 years. There is no scope of short term capital gains. What is capital sum assured? There is also a lot of discussion about. LIC has clarified what is capital sum assured, death sum assured along with term insurance rider if you have taken. So if you are taking term insurance rider, naturally that becomes supposing 10 lakhs is a sum assured and then 20 lakhs you are paying 10 lakhs as a term insurance, then capital sum assured will be 20 lakhs. Even though if you are paying 2 lakhs for 5 years, this will become less than or equal to 10% of the capital sum assured, that becomes tax free. So it is a very good provision, my dear friends. Please use it. Then sum assured on death is exempt in all conditions except in Keyman insurance and section 80 DD3 where premium paid is taxable. Here, under what head it is taxable and how much? My dear friends, under 80 DD3, where I said the disabled person predeceases before the proposer, the premium paid amount will be taxed under IFSOs. IFOS means what? Income from other sources. If it is in Keyman insurance, the employer takes the Keyman insurance policy. If employer receives the maturity proceeds, it will be coming under head of income from business profession. Then if it is employee, it will be considered as salary. If other person like director, income from other sources, how much amount? The total amount minus premium paid will be taxable amount. And for 2015, 10%. So see, as we discussed earlier, the policies, the premium exceeds 20% of the sum assured. If annual premium exceeds 15% for disabled policy in a year, then 10%, if the premium exceeds 10% of the sum assured in a year, then this policy will be taxable. How much it will be? Total amount minus premium paid. So that will be the amount. And ULIP plan, it will be treated as capital gains. If it is above 1 lakh, if the gain is above 1 lakh, that whatever the in excess of 1 lakh, that will be paid. In excess of 1 lakh, that will be paid. Oh. In excess of 1 lakh. Capital gains capital gains in excess of 1 lakh will be taxable. That is how much? 10%. So quite clear, my dear friends. I think I have cleared a lot of doubts. If you got any doubt, you can go back and check. And life insurance policy is non-taxable. So which are all the conditions? Let us see. Very simple. Premium per year less than 20% prior to 31 March 2012. If you have taken policy before March 2012, if your premium is less than 20% of the sum assured, here also of SA. If the sum assured, if the premium is less than 20% of the sum assured in a year, then the policy will be policy money will be tax free. Then premium per year 10%, that is again here of sum assured. Sum assured, then again it will be tax free. Here it is 15% of the sum assured, 15% of the sum assured if taken after 1/4/2013. So quite clear, my dear friends. Then we will talk about the TDS. The TDS here is how much TDS will be there? No TDS for exempt policies. If for this non-taxable life insurance policy money, there will not be any TDS deduction, and no TDS if taxable amount is less than 1 lakh, and 5%, that is if taxable amount is 1 lakh, then there is no TDS. If it is more than 1 lakh, whatever the more than 1 lakh, 5% is taxable, my dear friends. That is very simple. Before going to taking any policy, if you are selling any policy, please go through this video, get yourself clarified. I would like to give a disclaimer about this presentation is that this is basically a bird's eye view of what the sections are all about. It is not a section by section. It is not a theoretical class. It is to make your agent or agent force, development officer and field force and financial experts, those who want to become financial expert, those people should get benefited giving bird's eye video. So thank you for watching this video. Please subscribe, comment and share. Thank you very much. Bye bye.